Investors and traders, welcome to the channel Market Chart Pattern. Today is 16th of September 2024. I hope everyone is having a great day. We will be reviewing the key US tech stocks in this video segment. As always, this video is for educational purposes only and it is not a financial advice. So we'll start by taking a look at the stock of NVDA. So what we see is that NVIDIA held this point C, which was around $90. We had identified this zone here. So it has held this, and I believe we are actually in this ABCD higher, which could in fact see the stock move to about $150 per share level as long as we remain above this point C, so which means that we are in the CD leg higher. Once we get there, we will also have this pattern which is highlighted in yellow. So it could be a level which could be it's a target for us, but it could also turn out to be a stronger resistance. So we could expect some sort of a pullback, perhaps the kind of pullback that we saw when it hit that 78.6% retracement and moved much lower pretty quickly. And now if we just move down to the daily chart, one thing I would like to point out is on the daily chart. Oops, what is it doing? Here we go. For the last couple of days, the market is actually finding resistance at the 61.8% retracement. Let me move this out of the way so it's a little bit easier to see. I'm also removing these downward targets here. That only becomes active if the point C is taken to the downside. And so you can see that it appears a very narrow range, 2 trading days. Both of them are doji candles because of narrow trading ranges, very narrow trading ranges. I don't know the volume, I don't think it's that great. So it appears the market is expecting or waiting for some kind of a catalyst or a news event or something, some figures to come out. Those could be major economic events, for example. So the key point for us is that it is actually being held by the 61.8% retracement. This is something which I also covered in yesterday's video for the stock market. So this is where the Nasdaq is being held. And if it is able to get above the 61.8% retracement, I think we can see a pretty good move at least to these highs, right at the 78.6% retracement around 130, and breaking above that is 155, the target that we saw on the weekly chart. Let's take a look at the QQQ. Before that, let's take a look at the XLK, which is the Spider Select ETF for technology, and we'll take a look at the weekly chart. Here we go. So the current week has just started. This pattern is very similar to what we have seen in the chart of futures, the NQ and also the NDX for the Nasdaq 100 index. One of the key things is that we have this trend line here. This is where the market needs to get above that, and if it does, which in my opinion it should, because the momentum is still strong. And one of the key reasons is that this market retraced right to the 38.2% retracement. Here we go, off the lows of October of 2022. And the QQQ, which we'll take a look at right now, it didn't come close, but XLK did it before QQQ. So one of the things, and also if you look at the from momentum perspective, just using the moving averages, we have the 89 period moving average is the green one above the 200 period moving average, which is 200 week moving average in this case, which is the gray line, and the 20 week moving average is just where the price is currently. So this just trend line is offering some resistance, and once it is able to get above that, in my opinion, then it's gonna go and maybe test these highs around this area. So really key hurdle, this trend line. If it just keeps on providing resistance, then we could see perhaps more of a pullback. So we'll wait and see, but momentum has improved a lot, and I'm really the key thing for us is that this 38.2% retracement. Things change once this low is taken out, because 38.2% retracement will be broken, and in strong trending markets, the 38.2% retracement is is one of the key things for strong trending markets, whether it's up or down, depending on the support or resistance, whichever direction you take a look at. Now let's take a look at the QQQs. Here we go. So similar kind of pattern, but this one, I think the composition is a little bit different. It never reached to the 38.2% retracement, but the XLK did. And when that happened, which was around the 5th of August, this is something I had actually identified um, in our videos. Now, one of the key things that the both of these, along with the Nasdaq 100 and the NQs, the futures, they completed these big ABCD patterns here. So maybe we are expecting more of a trading range market, but the chances are it might be able to actually get above this, get into this, this sort of a gap formation right here. Here, and if the market is strong enough, there is a chance of making new highs as well. So um, we'll just wait and see what the price action will give us. Now let's take a look at the Apple stock. So September is a month which is typically a weaker month, statistically speaking, for Apple. Not entirely sure why. Maybe it's because Apple holds a lot of their newer models. They come out, so they make the announcements, and sometimes the models become available for sale a little bit later on, or they are so popular that they get out of stock, and then the stock arrives a little bit later on, maybe towards when the Q4 begins in earnest. So with that, what it has done is it has retraced. Now I do have this possible ABCD right from here, which could actually see the bottom of this trading range being tested around the 191 level, 195, 191. But the momentum is quite strong because this is just the weekly chart. The week has started, but for the past 2 weeks it has been moving lower, so we have to consider that. So this orange pattern that I've identified, there is a possibility for that, but this 200 period moving average is acting as support right now. So I believe as long as this 5th of August low is held, Apple looks strong. So in my opinion, might be actually in this ABCD higher, which could see $250 $260 per share level in the stock of Apple. So Apple is one of the few technology stocks along with NVDA which I really like. But I've also found a new stock which I would like to show you, and that one is actually eBay. Here we go. So look at the price action in eBay. It's a stock which has been in existence for a long time ago. In fact, it existed, or eBay as a platform existed before Amazon. I think it also went public before Amazon at in the late 1990s. Actually, the market cap of eBay was more than Amazon, and then Amazon actually took over when they actually figured out their fulfillment side of things. And then of course later on they had the AWS as the product, which actually took the company to in a different sphere. So look, on the weekly chart it has had a very nice base here. This is the kind of the Wyckoff stuff. If I can draw it for you, let me make an attempt. The tool I am looking for, yeah, maybe this might work. Oops, it's like a spring. So this is the wrong tool. I chose a sine wave. This is not something I wanted to show. I just wanted to show it's like coiling like a spring. So basically what happened is that there's a lot of accumulation that took place in this area, and then we had a very nice break here, and then the stock is moving higher. Now let's see what sort of retracement it has done thus far. There we go. So it's right at the 61.8% retracement. Getting above this is very bullish for the stock. And then what we can actually look at is a simple ABCD pattern. We can take these as the March of 2020 lows. Hard to believe that March 2020 was about 4 years ago. And there we go. So 92, which is also the 1.272 expansion. So we'll have the one-to-one price projection and the expansion there. So pretty important level to watch. Let me actually also highlight it like this here. There we go. So I think that once it clears the 61.8% retracement, then in my opinion it becomes much stronger, and we could actually see a move there, and we possibly will get some resistance from the previous all-time highs. So eBay looking strong, and then on the daily chart you can see that it's a very strong looking chart. I do not know exactly in terms of fundamentals what might be the difference. One thing I can think of is that a few years ago they got a new CEO. I think he came from actually Walmart, and he has certainly made a lot of changes on the platform, I believe. The other thing I'm thinking is that maybe a lot of consumers are actually flocking towards eBay because of higher inflation. So on eBay they might be able to find some used items, which they can find at lower prices perhaps, or and make a use of that. And eBay actually the way it's working is it has commissions. They don't do fulfillment, so of course that is a profitable commission based model. And if they're able to actually keep their costs low, then eBay could be a pretty profitable company. So this is also one of my favorites now, so I'll be watching this and adding this eBay, a long forgotten stock, which seems to be coming back to life in our videos now. Now while we are at it, let's actually take a look at the e-commerce king, which is Amazon. And you can see that the Amazon stock is doing something a little bit different, whereas eBay was making looking stronger, and in my opinion I think it's making new 52-week highs, still below the previous all-time highs, but making a really good aggressive moves to the upside. This one is actually lagging a little bit after completing this big ABCD and this range bound here, and it really needs to clear the 78.6% retracement, which is also the highs of 29th of July that week. Otherwise, we could see an ABCD lower right here where we have the 200-week moving average. So this is what Amazon is doing, and let's also take a look at Shopify. Shopify stock, you can see that maybe there is a chance it gets to about 99 or $100, but yeah, this could be a potential bottom here, but it looks more of a range bound affair to me, with the possibility of hitting maybe $100. And of course we have got the fourth quarter coming up soon, which is the big shopping season, so maybe it gets some benefit out of it, and this could be a potential double bottom for now, but not a very good looking price action chart in my opinion. Let's take a look at IBM. This is also one of the big blue, as is known as one of the older tech company. This is one stock which we were following for quite some time, and then I was just not including it for in the regular videos for quite some time, and then it's just making new highs. In fact, it has made new all-time highs, so it has broken above the 25th of February 2013 highs, so that's great. But if you look at the patterns, maybe you're able to watch some of the older videos in the archive. Fantastic patterns completion right here, and then it was a big chop in this region right here. And I believe what is happening is that the stock is now going for about 240 to 250 level. That is the level that we had identified in long in advance. So good to see the market actually moving in that direction. And what will happen is that at that level we will be actually completing this ABCD, going back all the way to 2002. Isn't that fantastic? And if this and look at this, the stock is getting parabolic, and I think the last time we saw something like this happening was around here in the 1999, before the dot-com bubble burst. So it is getting in that direction. It's getting parabolic. It's all related to artificial intelligence, and this company has a lot of software, a lot of technology which is related to it. Also, they bought Linux, which runs a lot of servers for a lot of companies. So many things going for this, and of course a few years ago they had a new CEO, and this is the trend that I've seen. Whenever you get a new CEO, they don't come in for 1 or 2 years, they come in for 5 years, 10 years, or even beyond, and they come in with a vision and they begin to execute on it. So the first couple of years, we might not see a lot of changes, but then eventually what happens is that it just becomes a new company altogether, and it becomes a new uh, there's new DNA altogether in that. And this is one of the reasons when we look at the stock of JP Morgan, I talk about if Jamie Dimon will leave, as he indicated retirement. I don't know exactly when he plans to do that. He will be putting together a team chosen by him, in my opinion. But still, it'll become a new company, and it'll have eventually a new DNA in it. And longer term investors might actually pair out of it a little bit. So, just my thoughts on it. This is the stock of IBM. And now let's take a look at Tesla and see what the Mr. Musk has been doing. And here we go. So the stock is actually looking much better. Here we go. And the key reason is I'll show that more clearly uh, um, on the daily chart. But this 5th of August low is very key, because this is going to be point C for us. So it has held for a number of weeks above that. So I think I'm going to remove this possible scenario for it to move around here. But this gap formation is still here, so I think at some point it might fill that. But for that to happen, it has to break below the 5th of August lows. So the chances are that we are actually seeing another smaller ABCD pattern panning out, which I'll show you on, which will actually take us to around here, nearly $300 per share level. So here we go. Here we go. Sorry, I was wrong. It will take us to about 250 bucks. That's the orange one. And also close this gap. And yeah, I think on the daily chart I'll just leave this gray shaded region for now. I did delete it on the um, I did delete the ABCD on the weekly, but I left the gap formation there. It makes the chart a little bit clearer as well. So this is what we are looking at. Tesla really critical that the 5th of August lows are held. Then I think we are actually in the longer term ABCD patterns higher, something which I've not shown for quite some time. This is really for investors who really believe in the stock. If we just look at the monthly chart, we have the point C right here, which is the 3rd of January 2023 lows, and the ABCD actually points to $500 per share level. Now that's quite hard to believe, given the fact this stock has pretty much done nothing, has just been going down in a trading range since July of 2023. But if it begins to get above this 315 level, above this swing high, I think it will begin to get more conviction that whether this ABCD to the upside is likely to play out. So there we go. This is what we are looking at in the stock of Tesla. Now let's take a look at Microsoft. So the Microsoft, yeah, so this one is actually interesting. So last week's price action was good because it took out the swing of 19th of August. So I believe I'm going to remove this possible scenario here. Looks more of a trading range affair right now, but it is also breaking above the 50% retracement. So I think we might begin to see some more strength come in. But there is a possibility that the stock might just go trading range to downside, and the possibility of this kind of a bear market that we had seen, here we go, back in 2022 might come into play. And if it did, then we'll have the symmetry right here. Fantastic company, and the trend is pretty strong, but it is also, you look at the number of weeks it sold off for, and now it hasn't done that. If you look at even in this area, uh, um, it is beginning to look that that strong trend is kind of beginning to morph into a trading range, and then which could actually lead to a CIT, change in trend. But of course, for that to happen, this low needs to be taken out to the downside, and we'll also have the ABCD confirmation there. But possibly we could retrace just to 370, which will be 38.2% retracement of this entire leg, and that would be perfectly normal as well. Now let's take a look at Google. This is not a favorite stock of mine at all. It's finding support from the structure here, but I think in my view it might be actually in this kind of a move to much lower, about 125. This is what we are watching in Google. Let's take a look at Netflix. Now Netflix, it made a new all-time high. Range bound behavior, I think, is moving in this kind of a channel formation. It's got a chance to actually reach the upper boundary, and we have the 1.272 expansion coming 727. But I think just keep on watching. I think it might be some sort of leading or ending diagonal, whatever the terminology might be, but channel behavior is there in this stock. Now let's take a look at Meta. So the Meta stock is also range bound, and I think we are actually moving towards 560, 567. It's got this wedge kind of a pattern formation, so I think we are likely to just go and touch the upper part of it right at the 1.272 and also 1.618 expansion of these. So there we go. This 1.272 is actually an extension of a previous move, and 1.618 is the expansion of this entire bear market the stock had. This is where Mr. Zuckerberg, he was really into the idea of Meta, change the name of the company, Facebook to Meta, and then of course he made a pivot right around here into artificial intelligence, and the investors loved it. And then the stock just boomed to new all-time high. So there we go. I like this stock Meta. In fact, I like it a lot. Now let's take a look at Roblox. So Roblox has also been in a really long consolidation. This stock actually became public via SPAC. So I think some insiders who had been in the company as investors for a long time wanted to an exit perhaps. So SPAC gave them an opportunity, and we have seen boom. This is typical kind of IPO price action that takes place. So it has got a chance once it's able to get above these resistance level to reach 67, which will be 38.2% retracement. And if it's able to get above this, then higher prices are likely to come for it. But it's just been in a very long trading range for a very, very long time now. Oh yes, so let's take a look at Zscaler. Very volatile stock. Really need to be very patient with it, especially following the patterns that we follow here, because technically speaking, it came back when I believe some earnings had come out. It went and tested the upper part of this trading range, and earnings came out, and boom, it tested the lower part. But the point C, on a weekly basis, it is not closing below that, so it's respecting this 61.8% retracement. A pretty hard thing as a investor or trader. Well, perhaps investors you might be okay, but for a risk to reward, this is where you have to be very careful with point C. Because of this, we could basically be looking at ABCD higher, and then maybe uh, another trading range top, or testing of the top here is possible. If it breaks below this C, then we are going lower, and the ABCD calls it to 102. So really hinges on this point C, whether the pattern will fail, or the pattern that we are watching, which is the bullish pattern, will continue. Make or break point C. So we'll just keep on very pretty volatile stock, Zscaler. Now let's take a look at. Let me see if I've missed something. Um, I think we have pretty much covered all the kind of stocks that we like to cover. This eBay is a really interesting one, so I've added this. Let's take a look at Oracle. There we go. Boom. Very strong move. Earnings came out. So Oracle, all this is artificial intelligence related, and of course Oracle company makes relational databases which are used as a backend for many big companies. So their technology is in use, and I think now they have moved into a lot of it into cloud and artificial intelligence. I think the United States TikTok database is also with them, so they have quite a lot of data. And investors are, I think these days investors are finding any company which is kind of artificial intelligence related, but the stock has not moved much, and then the stock begins to move higher. So Oracle is an interesting one. I think at one point we were paying attention to it, but it just went into this. Which now looks like a propeller shaft pattern for quite some time. So I wasn't just looking at it, but it would have been a fantastic one. And you look at this one, ooh, it tested 38.2% retracement two times, so a double bottom here and never looked back. So this is the power of the 38.2% retracements. And of course we have the structural support right here from this region here as well. So confluence of classical support, and then 38.2% retracement, and we get a one-to-one price projection out of it. So there we go. Thank you very much for watching the video, and if you found the video of educational value, give it a thumbs up. If you like our technical analysis based on pattern recognition and Fibonacci retracements, expansions, projections, extensions, then please also subscribe to the channel. And if you do, then hit that bell icon button. That way you will know when the new videos are posted, so you will not miss on anything. Have a great, fantastic evening, day, wherever you are, and we'll speak with each other soon. This Wednesday we have the FOMC meeting, and expect a fair amount of volatility in the markets to come also tomorrow, because of there's some economic data which is coming out. Let's have a quick look. What is the economic data? Let's take a look at the calendar on forexfactory.com. So for Tuesday, we have for US core retail sales and retail sales coming out. These are month-on-month figures. Because this one is in red, it usually means it is a market mover, so the market does respond to it, in terms of fair amount of volatility. This comes at an hour before the market opens. And then we have these yellow ones, which are capacity utilization rate, industrial production, business inventories, FOMC member Logan speaks. So I think this one could have some impact. And then we also have the housing market index data coming out tomorrow. So a fair amount of action, but the majority of the action will be actually prior to the market opening. And then on Wednesday we have the Fed fundraise. This is the FOMC, so this is a big ticket item. A lot of volatility could be expected around this time. And then if we take it, and of course on the Thursday we have the British pound. So we have the Bank of England coming out with their monetary policy statement. So it will be interesting to see whether they cut interest rates or not. It's gonna mostly impact the British pound if you're trading the currencies. But could, of course it will also have an impact on the FTSE 100. But sometimes the price action also spills into the American markets as well. And then we have the unemployment claim. So in my opinion, this one is gonna have quite a lot of impact, especially after the FOMC. Whether the unemployment claims are rising or they're getting lower, because Fed is really closely watching this data. And Philly Fed manufacturing is orange, but at times I've seen it move the market. Then of course the existing home sales will data is also coming out. So all of this data, all this is orange. I have seen this now also impact the market in terms of volatility. So fairly Wednesday super volatility day, Thursday pretty volatile because the market events, and Friday 20th of September, not so much in terms of the American markets. In the USD, I only see 7 p.m., which is because I'm in the UK, this is the British summertime. FOMC member Harker speaks. I don't know how much of an impact it will have. So there you go. A high volatility week is here in the markets. Key events happening Wednesday, and 19th we have a key timing coming in from the Nikkei index, which I showed you yesterday. So also watch yesterday's video. A lot of things happening with the economic data, and we have a key timing coming up as well. So we'll have to see what sort of price action is for us, what the markets will show to us this week. Have a fantastic evening, day, wherever you are, and speak to you soon. And keep safe.